All right, Frank, we've been
Oh,
pushing along here today. Don't mind, love the conversation. Don't mind doing that, but it's going to limit your charts a little bit. Find me the best ones you got, and
and you
let's rock and
you
roll.
promised me at least a dozen today, Tim.
Let's do it.
Okay, let's start with KB Homes, KBH.
I saw these guys this morning, actually.
$50 breakout. Maddie, I'm going to throw these guys to you. We got a little $50 breakout play going on KB right now. As of right now, at least, looks like they're going to close above that resistance. They've got some history going way back, right? He's been around a while. You probably remember when KB Homes was on its way to $90, but that was quite a while ago. Don't really have a lot of significant resistance. We'd have a major pivot point, and I'm going to have to say on the monthly chart going back into 2007, but we don't really have any significant price history between this 50 break and that approximately $55 mark going way back in the way back machine. Could I talk you into a $50 breakout here on KB Homes, Maddie?
Well, it does feel like we're subprime market meltdown this space in the market, and that is what transpired here before the nasty correction that happened in real estate in 07, 08, and 09. With all of the residential construction companies, it's always going to come down to which one you personally like.
Correct.
Right. And when you're talking about DH Horton Lennar, when you're talking about Pulte, Toll Brothers, KB Homes, it really is pick your poison, which one you personally like, right? You know, for somebody, they might say, oh man, I just love the momentum of DH Horton. I just love DHI. I love the momentum, the consistency, high base breaking out post earnings today. DHI fits a high base swing trading, you know, with momentum behind it. You got to love that, right? And look at the 9 EMA there. How do you not have confidence? How do you not have confidence that that's going to just
like what you're seeing?
Right?
I was hoping it was going to be closer to $100 so I could give you the choice between the 100 and
I
the
know
$50 breakout. It just moved too much on me.
You know, when you're taking a look at Lennar, same type of thing. But coming back to KB Homes here, KBH, look at the consistency of that 50 handle. You got to love the consistency of that 50 handle. And yeah, you got a good candle, but you are not overextended on the breakout here. And for me, I and again, there's some good trades in this space right now, and there's certainly going to be some representation on the scatter reports.
For sure.
You will most likely have two home builders, one on the stock report and one on the options report. Now, obviously, you're never going to want to trade two, but we're going to put the one that's the most liquid option play on the option report, and we're going to put the one that is the best technical setup on the stock report. And so I do think you're going to have representation on those reports, and I'd be a little surprised if, you know, honestly, if DHI isn't on the options report. And I look forward to the conversation we have between, you know, the breakout on KB Homes at $50 and some of the other ones. But the KB Homes $50 breakout stands out in my opinion.
Yeah, the DHI and KBH are the two that stood out to me in that space. So
me too.
So
if you're looking for a more of a multiple time frame swing position style, I think you're looking at KB Homes. And that's why I think you're looking more like stock. If you're looking at more of a momentum play in this space, you're picking DHI. That's a really good chart, momentum base. I think there's room in this space right now for everybody, for different types of traders. I like KB Homes, a little bit more consolidation, little cup and handle feel to it, ascending triangle that puts you at the starting point of trends versus whereas you're looking at DH Orange, you're looking at a continuation of momentum in trend. So yes, you're looking swing trade in DHI, multiple time frame analysis in KB Homes on the breakout.
Kind of dealer's choice right now in the industry. So
pick your poison. And I personally like both of these. Like it's just depending on what you're looking for in your portfolio, quite frankly. You're looking for something a little bit longer term that you don't want to manage very aggressively. You're probably looking at the stock position type analysis on KB Homes. Again, if you're looking at trading a little bit more aggressively, short-term swing trade style, step system type style, I like both KB Homes and DH Horton for step system, but I would pick DHI for the step system because of the momentum and trend.
Very cool.
Cool. Mark, Tim, anything you'd like to add?
No, I think that's spot on.
No, I like the
I
KBH
really do.
breakout. I think it's clean. You can trade it. I think Matt's spot on here. Dealer's choice in the industry. You got a few choices.
For sure. All right, it's getting close to lunchtime. Let's look at Bloomin' Brands, BLMN.
Okay. I see what you did there.
See how it goes.
Yeah.
I like it.
Yeah.
I like it. I like Marty hitting support. I like the upward movement in price. I like the pivot confirmation, and I like the candlestick relationships to this support bounce. This is a bullish retracement snapback against the old resistance channel. Very good technical setup to be in.
Don't really have any other things to say. I mean, you pretty much sum it up.
Is that a Cody special?
No,
I-
I don't think it is.
I don't think it is
the
either.
Cody special
It's
is
a
usually a little more
snapback.
violent,
Yeah,
right,
it's
or
a
a little
snapback.
faster. And these guys have just been a little bit more orderly, stepping stone style. It's close enough, and I think Cody might call it a Cody special. I
Yeah,
just
but
think Matt would.
Cody can't call every downward movement in price that tests resistance.
Have you met Cody? Of course he can.
No. What Cody says and what I allow on that different. Cody special is breakout if this candle would have came back down and tested.
Mhm.
That's the
yeah.
snapback.
For me, when I think Cody special, I think we broke out and it's two candles back into a hammer, a doji, something like that.
Something like that.
Two candle snapback.
Two,
is
three
what I
candle.
think.
2-3 candle. This is more like a traditional pullback coming into resistance. I'm not giving a bullish retracement the Cody special. Like, no.
You're just not going to give it to him.
No, not bullish retracements. It's like the most standard pattern out there.
It's a beautiful pattern. And it does make me want to go get a bloomin' onion, by the way. I am.
They
actually-
are delicious.
Bloomin' onion with
It's been a
that
long
dip.
time since I had
Frank,
a
you're
bloomin'
making
onion.
you're making me hungry,
I
Frankie.
know it's getting to be it's getting that time. Well, maybe Tim, that'll have to be your treat to us one of these days.
Yeah. These
We'll take-
pretzels are making me thirsty. All right. What you got next?
All right, let's look at a little breakout play on CSTM. Walking back into resistance, right? Pushing through earlier in the week, little 2-day consolidation. As it currently stands, I love when you see this because it makes it a fairly easy stop loss, right? Is as far as where I'd want that stop loss. I'd get in basically above this weekly high here, putting my stop loss, making sure, number one, it's below whatever the low of this little consolidation is. As of today, that would be the 2-day low that we're seeing here. Line that up with the 9 EMA as well. So we're below the breakout channel. We've got the 9. We've got a little intraday support to work with from a stop perspective. We've got some room to run into that $20 marker. Maybe it's more than one swing to get us there, but there's not a lot of resistance until we approach that $20 range. Just a little breakout. Did me a favor, took a couple days off, didn't break and run like some other things. Could I sign you up, Tim, for a breakout here on CSTM?
All right, I'll give you my first instincts. Back up a little bit here, Maddie, when I look at the total context of it. I mean, I see the technical levels and even not on the weekly. Stay on the daily if you can for me. That will give it some context on the weekly. But see how so many overlapping candles, inside range candles, dojis for 2-3 weeks in a row. So part of my instinct, and I might have a bias on this, Frank, I'll admit my bias, is I kind of just I have a meh reaction to the breakout, even though it's clean, because I see the past history and the characteristic of a stock that can get stuck and rattle back and forth. So it would lead me to really a conclusion that you either position traded or you don't. I think swing trades on a company with that kind of personality can end up being tough in that regard. But how would you respond to that, Frank? Because that may be a bias I have about looking at the past history, seeing all that rattle and all that chop, and discounting the breakout here.
Well, I think it's a fair analysis. You know, you don't have to trade everything, right? And you can't trade everything, and you have to disqualify some things for one reason or another. So, you know, I'm never going to try to sell anybody really, you know, I'm going to pretend to, but no one ever really has to tell me why they're not going to buy or sell something. That's your money. So number one, I do understand on that side of things. On the other side of it here, I would argue that, you know, a breakout is a breakout. In this particular case, some of these other breakouts that we've seen, what was right around the corner? Resistance of some sort. Would you agree with that?
Mm-hmm.
Some of these breakouts that you're looking at that just were kind of choppy, bland, and I agree there were somewhere there. But I think maybe one reason for that was there was a lot of history on these guys. We had a lot of resistance levels. We'd win one fight and be right into that next one with no time to catch our breath. in this particular case. I would argue that this is the first time, at least in a while, that we've had that breakout opportunity where there's not, we win this fight and immediately we're slapped by somebody else. We got to get right back on our feet and get going. Here we have a little bit of room to swing if we want to do so. So that would be my counter to the choppiness of the breakout.
And that's fair. Yeah. It had to fight through some of those long-term levels, and it does look much better on the weekly chart from my perspective. Matt, what's your read here?
Technically should chop into about $20 over time from a technical perspective, but for me it's really simple. We're talking about an aluminum company out of France, and the only thing I want to do is switch this chart to look at an aluminum company out of America.
Well, Alcoa's already rocking and rolling, right? We already got that move. You got to wait. We got to wait for a pullback or some new development, right?
I don't.
Listen, are you telling me you're going to be patient?
I'm telling you, I have severe concern over economics in Europe versus America.
Fair enough. All right, Mark, this one is for you. This is our old friends at Chewy, CHWI. And this is a sell. This is not a buy. I wouldn't buy this.
Now, this is interesting. We've got to pause for a second. You haven't had a sell in Frank's chart section for a very long time. So this is kind of, I'm trying to remember the last time you brought a bear chart for this segment.
Yeah, it's been a while. There's not been a lot of great bear setups, right? Everything that's been bearish has either been too extended. I mean, there's not been a ton of great bears. No one needs me to tell them that. So
the bears were quick on violations of support, and then they stuck the 200-day moving average, and it became a very difficult shorting environment.
Exactly. And that very well may be the case here on Chewy as well, because of how we've seen these things snap back, right? But a couple of things I really like about Chewy on the sell side. I mean, obviously, number one, you can kind of see the break. This was a huge price point, right? This was a major breakout.
70s major.
I mean, that was major. We broke out of that thing, and it was party. I mean, we just flew well past $100. Ends up being support, breaking through that support here today cleanly over the last 2 days. That's also pushing us currently below that 50 weekly mark, which is always a benefit, right? We didn't even, we're not, at least as of right now, haven't even put up a fight here. We've got a little 2-day floor that's kind of developed here on the intraday, right? So we'd be kind of looking at that breakdown as kind of the signal to the bear side. We can go a lot of ways from a stop perspective, but I think no matter how we're going, we want to make sure that our stop loss or exit plan, where I'm throwing in the towel, is back above that $70 level that's been so historically important to this chart. So however much further beyond that wouldn't really bother me, just probably depending on how you like to roll with your stop losses. But I do think I would want mine at least above that to kind of give it a fair chance to see if we have some downward movement. There's not a lot to hold these guys up, right? I mean, maybe 60 as a support level. I don't know. Not a lot of great history, right? From a price action perspective. So if I'm looking for a bear and I feel like I need to add a bear, I think I could do a lot worse than a Chewy here.
I certainly agree with that. And 70 is the number you're looking at here, Frankie. Historically, multiple times it played a role over here at 70, came back, snapped back, a little bit more of a Cody special here, snap back coming into the 70 to confirm before you had that nice leg up in Chewy. Technically, this fits a short. There's no doubt about that. Violation of 70 with momentum. And when you're talking about stop loss placement on a violation of support that has yet to occur yet, I always go to the breakout channel. That's just me. If I'm looking to short under 70, I want a stop loss above 70. Make it very simple there. Keep it simple. You know how that works, right? The KISS method. And then you're obviously looking at that next support level, which would be 60. T2 in this downward movement of price, you would think 50. No, you got a support level slightly north of that at 52. So you would expect a little bit of slowing momentum on the next leg, but to me, that's to 60. That's a good short. And also, like, Chewy fits the entire philosophy of growth right now. Growth was beautiful in 2020. Growth is not in favor in 2021. And a lot of these stocks that pre-pandemic went from, $30 to $120 and saw 400% price appreciation. Well, we knew fundamentally this wasn't real, guys. We knew that. Now you're seeing the puke back up. So it does fit fundamentally. Technically, it fits too. The response has been very negative throughout all of this. It tried the battle at the 200-day. Now, if you were battling here, what are you battling now?
Well, and that's the thing.
This is the time you capitulate.
Mm-hmm.
Yeah, I mean, this is the thing. I mean, you've had lots of reasons why you might want to buy, right? We're trend traders.
Not under the 200 though.
Yeah, exactly. We bought the bounce of the 200. Heck, we might have been thinking the bounce of the 50, but we're not even getting that, the 50 on the weekly, I should say. So all of the reasons why I might buy from a perspective, I like Chewy. I'm a long-term, buyer of Chewy. I just don't have it. Why would I buy it now? Right. And so that's always how I like to think about breakouts and breakdowns is, why would somebody else buy this right here?
You're regretting buying it here, and here. You need to go to therapy at this point.
Oh, you're not happy.
You're not happy about anything.
No. You're not happy at all.
No, this is the time you capitulate. You tried the 200-day moving average bounce. It did not work. It got violated. And now you're talking about an entire space that is out of favor right now.
Mm-hmm.
Right. Yeah. That these high growth, high multiple type companies that went gangbuster last year. I'm sorry, when we're talking the names we've been talking this year, industrial, finance, energy, basic materials, cyclical, Chewy doesn't fit into that.
Mm-hmm.
They just don't.
It's fallen out of favor from a theme perspective. The trend is ugly. You got a negative price reaction here at the 200. I see it. I can't. Who's going to argue that?
Price can do anything.
Yeah,
sure. Yeah.
But if you're looking at it, price can do anything, and you understand why technicals work the way they do. You tried here, you tried there, you even tried a little bit here, and it just has not worked. That's capitulation.
Sure.
I'm done fighting, guys.
Yeah.
We'll try again later.
I'll
holler
see you
at me
guys
after
in
the
fall.
summer.
Yeah, I'll check you after the fall or after the summer. Exactly.
Yeah, that's right.
Call me in August.
Right.
Exactly. All right, Tim, I know we're up against the clock. I'll do two more quick ones because I can't end on a bear. That just doesn't feel right. So I am going to go to a Cody special style in Rollins, ROL. Been reversing, showing some nice characteristics, bottoming, getting trend back on track, broke above the 200-day moving average last week, ran to very predictably resistance level, the last pivot from back in February, pushed us back down. This was more Cody special, at least in the speed, right, Matt? Where it happened, snapped right back to that 200-day moving average, which is not too terribly far off of, maybe an ugly trend line that you could potentially draw on these guys. I think there's a couple ways we can think about a Rollins if we're interested. One, if we're wimps, we can just wait for that 38 break.
I like it now. Like you can wait for that.
You can wait for that break.
There's nothing wrong with that.
Agree. That's a wimpy style, right?
I do like a little scale in front running as we do this though.
That would be the second way, right?
Yeah.
And I would agree with that. Do the 1-2 approach.
The 1-2 scale in, and then you add to 38. Yes,
because we have room into those, to those low 40s, right? From a resistance perspective, so we still have room on the break. Or 3, we could just say, hey, we've got the trend going. It's not shocking. Who's surprised that pivot acted as resistance? Anybody?
And Frankie,
come on.
That's my point here. You gotta love a stock that performs technically the way it should, right?
Exactly. Yeah,
and
makes perfect sense.
And we talk about the consistency a lot. We love consistency in price action. When you're looking at this stock here, and you're seeing this, you are absolutely talking about this being overextended. 100%. You're running from 34.5 up to 38. This is not a stock that likes to run like that. You're overextended on the breakout of the 200-day moving average, and you're saying what? Well, where could this find that target? 38 stands out a ton to me. Stands out.
Right.
Old resistance, old support, old resistance. That 38 handle means something. And so when it comes into 38, as you're overextended post earnings, it doesn't shock me that you see a little profit taking off this type of response. And where does it come into in that profit taking galore? Well, where it comes into in a decreasing volume scenario, mind you, increasing volume on the upward movements in price, decreasing volume on the drift. You obviously have the increasing volume post earnings, but in the downward movement in price in this Cody special snapback, bullish retracement, however you want to consider that type of price movement, I would call it a flag based pattern, but however you want to consider that, look at the contracting, decreasing volume there in the sell off. And then you come into the support handle right there, hammer candle, double dip test confirmed today. You got to like this technically, and that's why I say I do like a little front running scale in approach where, let's say your standard, and I'm just going to make the math easy, let's say your standard position is 100 shares that on Rollins or Rollins.
Right.
You're going to do 100 shares. Well, I like 50 here and 50 above 38. Basically, it would be the very basic way of scaling in approach, right?
Right.
And so I do like that, but I like it because of the consistency here, right? I understand the chop here, a lot of volume around earnings. I understand that choppy wiki mess. Okay, so I'm discounting that given the fact that it's around this volatile historical moment, right? But you come into 38, it's sold at 38, it should have sold at 38. Profit taking should have happened at that point. Profit taking did happen because you have a fairly substantial decrease in volume in these downward moves in price. Again, that is a signal of profit taking and not institutional selling, not shorting. It's just the people that made money in this run are locking in a little bit of a profit, driving the price back down into support. Where is that support level? Right there at that 200-day moving average. And so I do like the consistency here, Frank. And because of that, the importance of that 38 handle, and the reason I like this so much is the importance of that 38 handle and how it has played a role historically. You scale in on the bounce, you add in on the break, and you watch it run to 40, 42.
I like it. You can sign me up for a 42 run. Absolutely. So very nice. Tim, Mark, anything you'd like to add there?
Volume characteristics are really good.
Matt, when a basketball player just can't miss. Matt's in the zone today.
Feeling good. Good.
I'm not afraid to add if I have something to say. I'm not afraid to, I don't have anything to add.
Yeah, you don't got anything to add. You don't got anything to add.
Right.
So
I'll take the compliment. We shut the lights out. I'm shooting half court shots. Okay.
There you go. There you go.
Let's go.
I'm Penny. You're Shaq, right? I'm just tossing alley oops to you.
Just toss. Right. I'll dunk.
There you go. All right.
I'll take the compliment.
You deserve it. Okay, we'll do one more, and then I know we got to get out of here. And so since there's only one more, let's go with Schwab, SCHW. Little high base breakout. Nothing fancy here in the financial space. We all know what's going on over there. Little high base breakout develop over the last week and a half here on Charles Schwab. Nothing fancy, right? Either like high bases or you don't.
Everybody likes high bases, and if you don't, you need to learn high bases. In momentum markets, high bases are the number one pattern, in my opinion.
They're definitely up there. Yeah, either bounces off nines or high bases.
Think about the psychological difference between a retracement and a high base. In a retracement, people are looking to lock in profit against the previous upward movement in price. In a high base, nobody dares sell because they think it's going to go higher. I like high bases, right? That mentality, I like those high bases. Not the cleanest high base, I would say. Little choppy action here, but you've had it held up really, really nicely in the face of Tuesday, right? Whereas you saw the NASDAQ, S&P all start puking up. Charles Schwab held up very, very nicely. Only a doji candle on that nasty day. And so when you look at the price action this week, you're like, oh, it was really good. Well, when you add some context to what happened on, Monday overnight and Tuesday morning, yeah, you got to like it a little bit more. The only question is, where's your trigger here? I like, and when you're looking at it from an intraday perspective, we'll drop it down into a 30-minute chart. You do have a trigger above 71.65. You could take very aggressively. And then you got the wick chop between 72 and 72.16. It's just depending on how aggressive you want to trade the break. But the high base analysis is legit and spot on, and this breakout's pretty decent.
Yeah.
Yeah. And Tim, I lied. I got to do one more.
That's
I lied.
fine. I had Schwab on my list as well. by
Okay,
the way,
that's fine, but we
I
can't like listen. We just started giving me some compliments, and now you're having me analyze bank stocks. I mean, let's.
There you
I
go.
kind of feel I'm being used and dirty a little bit.
Well,
on the-
you,
on
you
the-
are.
on the- on
I
the bank.
forgot this one though. This one was on the one I wanted to make sure I looked at, especially when Mark showed up. So I got to go with Otis, OTIS, and then I will shut up. I promise.
See, I'll take an Otis high base over a Charles Schwab high base.
I will
but that's
too.
just me.
I will too. Look at that hourly and the consistency there, Maddie, that's
Yeah.
developed after that big pop and run on earnings. Very clean floor, very clean ceiling over in the industrial space. Obviously, it's killing it right as of late. So another little,
It's
post earnings
got-
high base break. I mean, what else could you ask for out of a earnings run like that, right, Maddie? That's exactly what we
This
want.
is what you're asking for. Like
Exactly.
literally, if you were analyzing this gap, I guarantee you would either said, let's see the next pattern develop, or let's see if it will fill the gap and look at that as a retracement. Well, we saw the next pattern develop. It gave it the consolidation. It allowed the 9 EMA to catch up to it. You got a very clean trigger above the high base channel. A little bit slightly better trigger, in my opinion, on Otis than on Charles Schwab.
Agreed.
Different companies, but same type of pattern. One more point of why I like Otis a little bit. Two more points why I like Otis a little bit more than I like the high base on Charles Schwab. Otis is an industrial company. Charles Schwab is a finance company. Both are hot in the market today. We all know which one I would lean towards, though, when it comes to choosing banks versus choosing industrial. I typically lean to the industrial side of the equation. But more so than that, in Otis, you have momentum in trend analysis. Pattern analysis is very similar between Otis and Charles Schwab, but because of the earnings response to Otis versus what we were seeing in Charles Schwab, you have a little bit of an upward movement of price, but I would not call this momentum. I would not call this momentum. You're not seeing any more momentum in terms of your support to your resistance as you saw back in these movements, or in these movements. And so you like it, but I do think you like Otis a little bit more because you have more momentum given the fact that you had a very positive response to the earnings numbers. I expect Otis to break out. I expect Charles Schwab to break out too. It's which one do you personally lean towards? I like the momentum in trend. I like the consistency in the resistance channel on the intraday just slightly more. It's not a lot more, just slightly more than I like what's happening on Charles Schwab.